Hi, very good morning to all. I welcome you all to this session. I'm Subiksha Bhaskaran, a product marketer from Zoho Books team. In today's webinar, we will explore the new amendments and policies shaping the future of GST in detail. Today, we are privileged to have with us CA Venugopal Gella, a GST expert. His notable contribution, including active involvement in drafting and designing the e-invoice alongside the GSTN and NIC. Additionally, he has authorized several industry-specific handbooks on GST and made significant contribution to the technical guide on GST audit released by the Institution of Chartered Accountant of India, ICAI. Today, he's also a national speaker on GST, and he will enlighten us on the latest update about 2024 GST recommendation. Thank you, sir. Over to you.
Thank you, Suviksha and Zoho team for this session, and a special thank to participants for being in today's session. Today, we are going to discuss on various aspects of 53rd Council meeting, which led to a lot of circulars that being issued. Then some notifications have come central tax and rate related. Then Budget 24 presented on 23rd July, the first time it has seen a lot of changes in the indirect taxes. We are going to cover all these aspects. Feel free to put your questions in the chat window. We will take up all the questions, and a couple of things are very important changes. So make notes because these have impact in your business or the way you understand the GST law. Starting with the circulars, let's begin by saying circular is something which is clarificatory in nature. Whenever you are hearing the word circular, that means the government has taken a call saying that this levy exists or this provision has to be interpreted in this way. Circular means it is an interpretation of a provision of the law. This first circular is on reduction of the government litigation for fixing monetary limit to file appeal by the department before GST Tribunal, before High Court, before Supreme Court. To be in line with the national litigation policy, to reduce the number of litigations, the government has taken a call that if the tax, interest, penalty, and the any other demand in a notice is less than 20 lakhs. Please note the demand value is less than 20 lakhs, then department will not go for an appeal. Now, what do you mean by department going for an appeal? Whenever you file an appeal with the Commission of Appeals and the appeal is in favor, the proper officer has a right to go against the appeal power issued by the proper officer in front of tribunal. Or if the tribunal order is in favor of the taxpayer, still the department can go to appeal to High Court against the tribunal decision. And against the High Court decision, it can go to Supreme Court, saying that we are not okay. Now, what is that the government now said? That if a department is going on an appeal, and if they are going in front of the tribunal, if the demand value is less than 20 lakhs, they cannot go to the appeal to the tribunal. Next, to High Court, if the demand value is less than 1 crore, they cannot go to demand to the High Court. And to the Supreme Court, it has been mentioned as 2 crores. If the demand value is less than 2 crores, then there cannot be an appeal to the Supreme Court. This is the first circular that has been come in. Next circular is clarification on 10(1)(CA) of IGST Act with regards to place of supply on a sale made to an unregistered dealer. It's quite common that with regards to the goods, whenever the sale is happening, whatever is the address provided by the recipient should be treated as the place of supply in case of goods. In services, we have section 12 and 13 dealing a different place of supply. But when it comes to the unregistered person, imagine a situation I am here in the state of Karnataka, Bangalore, and I am dealing with, let's say, I'm dealing with one mobile phone. An unregistered customer from Chennai, Tamil Nadu, is coming to the shop and buying the mobile phone across the across the counter. I am selling it across the counter. The question that comes is, should the levy be CGST, SGST of Bangalore, or it should be IGST of Tamil Nadu? Here we are making a presumption. The customer has mentioned that he is from Tamil Nadu, is given the address of Tamil Nadu, but the sale is getting concluded here in Bangalore across my counter. The question was, should the levy be of IGST or CGST? Since the address has been provided, it should be of IGST only. Same has been extended to e-commerce companies. Today, e-commerce companies allow people to do a single sign-on. Sign up with basically their Google account and they can sign on. They can enter their mobile number and they can sign on. They don't need to disclose from where they belong to, what it is. However, let's say I am here in state of Karnataka, Bangalore. My parents are residing in, say, Delhi, and I want to buy some goods to them. I am placing an order in Amazon, and let's say Amazon Karnataka Bangalore is shipping that product. Now, I am the one who is placing the order. I am the one who is buying the goods, but the goods are going to Delhi. So, what should be the place of supply and what should be the tax that should be charged? Here, the circular further clarified, saying that, look, the registered person, we are very clear the place of supply is registered person. In case of an unregistered person, the address has not been mentioned. The place of supply has to be the address given in the invoice, which will be Delhi, in the example that I've given, the second example. So this is a clarification that has come in. Next, clarification on import of services by a related person. We have circular 199, where for the domestic transactions, they have mentioned if there is a transaction between two related persons, person A and person B, while they did not give a cross charge for the services that they have done. Whenever there is no cross charge, it is deemed valuation has to be brought in. The circular 199 has given a relaxation saying that in case of a domestic transaction, if the recipient is eligible for input tax credit, anyhow he is otherwise could have taken the credit. It is kind of a revenue neutral transaction. And the 28 proviso also says value recognized in the invoice should be deemed as a transaction value. Circular 210 has extended, saying that the same analogy can be applied in case of an import of transactions by a related person. If the recipient is eligible for input tax credit, if there is no separate charge made, there cannot be a new levy. The value of that supply should be deemed as zero. It is not that they are saying that there is no levy. They are saying that the import of services is happening, value of that is zero. By that way, they have put rest to many of the problems that are coming up. Very another important and welcome circular 211 is clarification on the time limit under section 16 subsection 4 with regards to RCM supplies. Please note, this time limit is only with regards to RCM supplies. What is it they are saying? We have been dealing with the reverse charge liability in the demand 1718, 1819, 1920, wherein the government is, the department officers are levying penalty, saying that these transactions which you have taken from the government, this is under reverse charge, pay tax now. It's okay, I'll be paying tax. Can I take the ITC? They are saying that, okay, look, you are paying the taxes now. 16 subsection 4 comes in a way, you pay tax but don't take the credit. So it's becoming a loss. So now the circular is clarifying 31(3)(f), which says the self-tax invoice that needs to be raised is the basis for taking input tax credit given in Rule 36. In case of an RCM from an unregistered person, you as a taxpayer, you have to levy the taxes, pay the taxes on yourself by way of a self-tax invoice. Since you are raising the self-tax invoice now, the time of supply would be now, time to take credit would be from the self-tax invoice date. Simplifying with an example, 2019-20, I have made an unregistered purchase. Let's say I have paid factory license renewal fees. I have not paid it under RCM. I haven't raised any self-tax invoice. I am raising a self-tax invoice, let's say on April 24. The time limit to avail the credit would be from April 24, that is financial year 24-25, which is up until 30th November 25. So this circular has clarified that RCM unrelated on RCM from an unregistered persons, the time limit has to be reckoned from the self-tax invoice date. Next circular, circular 212. This everyone should be aware of and everyone should be very mindful of. Little complicated procedure that has been brought in. It is quite common in the business that you agree to some discounts. You agree to some discounts to be provided. Whenever a discount is provided post supply, what you will be doing, you will be issuing a credit note. When a credit note is issued, the liability gets reduced. The liability gets reduced. The condition is the input tax credit of the recipient should also be reduced. So 15 subsection 2 is increase in the value, 15 subsection 3 is decrease in the value. Now, one of the condition for decrease in the value is the discount should be established before the time of supply. That means I should have issued the my customer saying that if you pay me within so and so time, I will give you a discount, and the discount gets passed on by way of credit note. The second condition in 15 subsection 3 clause B subclause 2, it also says the input tax credit attributable on this discount basis this credit note should be reversed by the recipient. So you can reduce your input tax credit, you can reduce your output tax liability only if the recipient has reduced the input tax credit. But how will you know? As you are a supplier, you made a supply to me, you have issued a credit note. You may say that the credit note is reflected in GSTR1, reflected in 2B, so it would have been, I would have been reduced. It's an assumption. So now the circular is saying that, hey, let's not go with the assumptions. You go ahead and take a declaration. You go ahead and take a declaration from the customer, which is your recipient, saying that yes, during the year he has reduced his input tax credit. So basis the recipient declaration, you can reduce your output tax liability. If the recipient is not giving the declaration, you cannot reduce your output tax liability. So please note, for every credit note, now the department is going to ask you, show me the declaration that you have taken from your customers, your recipients. They have reversed the input tax credit. They have added one more condition. If the quantum of tax in the credit note, IGST, CGST, SGST put together is higher than 5 lakhs, then the declaration is not mere sufficient. You also have to get a certificate from the chartered accountant that the recipient has reversed his input tax credit by way of 3B reversal or DRC03, but some way there should be a certificate. This is another thing more important. Now, do you need to submit to the department? Answer is no. You keep it with you during investigation, during an ASMT 10 inquiry or Section 65 audits. You have to produce this as a proof so that they will allow you as a credit note. Pretty important circular 212, applicable to everyone. Please make note of it, whether you are in the business of goods, selling services, online, any case, whenever you are issuing credit note, please look at whether the recipient has reduced ITC by way of declaration. Next, circular 213, in terms of reimbursement of securities or shares, which is ESOP, ESPP, or restricted stock units, provided by a company to its employees. Most of the times, in case of a fully owned subsidiary in India, let's say I am here in India, my parent company is in US. My company is 100% subsidiary of the US company. Now, to motivate employees, employee stock options are provided. To motivate employees, employee stock options are provided. There is no point in taking a ESOP of the subsidiary company because it has no value. Only the value of the parent company has the shares. So the parent company shares are provided to the employees of the subsidiary company. When a parent company shares are provided to the employees of subsidiary company, it is a salary cost of the subsidiary company. So the subsidiary company will reimburse to the parent company the equivalent value in cash. So instead of giving employees salary, you are giving them the stock. Stock is not of your company, you are taking the stock of holding company, which is your parent company. Now, for the parent company, this would be recorded as a cost in the books of the thing. So this cost cannot be the holding company cost. They are the employees of the subsidiary. So the subsidiary company will reimburse the cost. Now, when this reimbursement of the cost is happening, the questions have been arised. Wouldn't it tantamount to import of service? Shouldn't the subsidiary be paying GST on it? The circular has analyzed. Look, firstly, this is a transaction of securities. Shares and securities are outside the purview of it. Second, these have been given to employees. Transaction between employer and employee is a Schedule 3 transactions. Hence, it cannot be in any way, this cannot be under the ambit of the tax net. Not just that, they have also further said, if the holding company is asking the subsidiary any reimbursement, let's say secretarial services or bookkeeping services for issuing the share, that amount will be under reverse charge. Otherwise, the principal value of the shares which has been given to the parent company is outside the ambit of the GST. Next circular is on warranties. We also had a circular 195 which talked about ITC on warranty. Now, this circular also gave clarity on liability of warranty. 195 which talked on ITC, this talked on liability. Whenever a warranty or an extended warranty is sold along with the product, the warranty will not be treated as a supply of service. Warranty will be treated as supply of goods. Let's take an example that I have sold, let's say, this mobile phone for 1 lakh rupees, and the shopkeeper said, you pay me 10,000 rupees, I'll give you a warranty. During the 1 year, if this is broken or anything malfunctioning, free replacement. Now, for this 10,000 rupees, let's take hypothetically, mobile phone is at 12%. 10,000 rupees is supply of service, which is say 18%. The circular says, since it is bundled and sold along with the phone, even warranty will take the nature of the principal supply. It should be treated as if it's a principal supply, which will be at 12%. Contrary, look at sale of motor vehicles, which is at 28% in cess. When these warranties are sold, these warranties will also get taxed at 28% and cess. So anything which is sold along with the vehicle will be treated as the vehicle as a composite supply. That's the clarity that has been given in Circular 216. Next, in terms of taxability on the loans provided by an overseas corporate. Now, generally, GST is applicable on supply. If a loan has been provided by overseas entity to an Indian affiliate, so Indian subsidiary can take share capital, can take loan. Now, whenever a loan has been provided, the question that comes up is, will there be any processing fee or any charges that needs to be considered as embedded in the loan, and should there be a GST on it? The circular clarified, look, do not deduce values further. If the parent company is charging as interest, interest is outside the purview. But if the parent company is charging, the overseas affiliate or the associate is charging anything as a sanction charges, processing fees, documentation charges, then it would be treated as import of services. Otherwise, it would not be treated as import of services. Next comes is transaction with relates to hybrid annuity model projects. Generally, for national highways, we call this as HAM. What happens in a ham projects? The supplier, and by the way, you may think that okay, I am not into national highway construction, so it would not be applicable. Think that you are doing any long-term contract to anyone. What do you mean by long-term contract? What happens in a highway projects? The responsibility of the person who is laying the road is to lay the road and maintain the road for over a period. So the L1, L2 is determined not just by the amount, but it also determines by the period. If someone says with this, say with 10 crores, I'll maintain by for 5 years. The another bidder who came 10 crores, I'm maintaining 7 years. So the L1 is someone who is also including their maintenance for a longer period. Let's say for laying the road, and for a hypothetical situation, let's understand someone has quoted the tender 10 crores and 10 years maintenance, and let's say the cost of laying the road is 8 crores and 2 crores is for the maintenance. However, the contract says that okay, it's 10 crores, I will pay 1 crore every year, but the road is laid in the first year. The question that comes up is what is the time of supply? If 8 crores is laying the road cost, shouldn't the GST be paid in the year one for 8 crores rather than paying 1 crore in every year? Here the worry is not about whether GST has been paid or not. What worry is if the 8 crore was paid in the year one vis-a-vis in the 8th year, which means equivalent amount of tax, the interest is getting lost. We know 18% is the interest. So here the many representations went in case of an annuity payments. Now this circular is for HAM projects, but I want you to extend that this circular would be applicable across. So any long-term contracts that you are undertaking, if the payments are on an annuity mode, the time of supply is as per the contract. Whenever the annuity is due, that should be treated as the time of supply. Very important circular. Please be aware of it. Next, we have Circular 224, which gave the guidelines on recovery of outstanding dues in case where first appeal has been disposed of till appellate tribunal is operational. See, we know that the appellate tribunal is yet to come into operations. Let's say there is DRC 07 has come and I was not happy with the demand raised. I went to the first appeal. I went to Joint Commissioner or Commissioner Appeals, depending on who has passed the order. Now, my first appellate authority has rejected my appeal and said, no, the demand is right, you have to pay. What do? I go for second appeal. Now, tribunal hasn't come. So, the government is very clear that there is section 78 and 79, the recovery proceedings have been mentioned, saying that within 3 months, if the money is not paid, you will have to recover the money. But I am not in favor of paying the money. I want to fight. I want to go to the tribunal. Tribunal is not formed. So this circular further clarified, saying that please pay the applicable pre-deposit that you have to pay to the tribunal, applicable pre-deposit which you have to pay the tribunal by way of DRC 03. DRC 03 payment can be made as voluntary or other categories, no problem. Against the pre-deposit, this can be utilized while you are filing the appeal. If you are making pre-deposit and showing this DRC 03 challan, there cannot be any recovery proceedings. Having said that, they have also amended the form DRC 03 to safeguard, saying that this DRC 03 cannot be used. Let's say in year 23-24, there was a demand. I have paid through DRC 03. 2017-18, the demand, I went for an appeal. Now, when the officer came, I am showing him for one officer, I am showing this DRC 03. Same DRC 03, I am showing it to other officers. So they have also amended DRC 03 with a declaration saying that this is not used elsewhere. So they have little made amendment to that. Next, 225 corporate guarantee, which is most talked about circular. because in the absence of any circular, many department officers have levied penalty saying that corporate guarantee pay 1%, 5%, whatever. And we had a circular which issued on corporate guarantee, what should be the taxability. And there was been an amendment in Rule 28, Valuation Rule 28 Sub Rule 2, saying that the corporate guarantee is applicable. The Rule 28.2 came in effective from 26th October 23. And they said prior to that, you go as per Rule 28.1, but from this date, Rule 28 Sub Rule 2, which comes in. And what does this rule said? That corporate guarantee, if it is extended between the related persons, 1% of the guarantee amount will be treated as GST, as the transaction taxable value, and GST is applicable. They further went ahead and started looking at the problems that came in. And that is where in the rules, notification 12/2024, they have amended this rule saying that firstly, this 1% will be for period, which is every year per annum. If the loan is given for 5 years, then it will be 1% every year. The second thing, they have also said that this is applicable to recipient in India. So let's say if the corporate guarantee is provided to a foreign customer, foreign subsidiary, foreign related person, whatever is the market value, whatever the value that you are giving, that will be the open market value, and you need not go with 1%. Lastly, there was a proviso in Rule 28, which we discussed about Circular 199 also, saying if the recipient is eligible for full input tax credit, there cannot be levy of any GST. Whatever the value declared in the invoice should be deemed as a value. They extended the same proviso in Sub Rule 2 also, saying that if the recipient is eligible for full input tax credit, then the same thing would be treated as the value of supply. That's another condition they have added to Rule 28 to it's kind of a trade friendly measure. Last circular which we are going to discuss about the changes is on IGST paid on account of upward revision in the price. Friends, we all know whenever the goods are exported out of India, the shipping bill is the basis for claiming the refund of the input tax credit, for claiming the refund of the output tax paid, if the goods are exported with payment of tax. For whatsoever reason, I have, let's say, exported, value of the goods is 1 lakh. While I am exporting, I have declared it as 90,000. Customer was not agreeing to my proposal. But any case, I said in the interim, I am sending it for 90,000. But I would still want you to consider as 1 lakh. After discussions, 3 months later, customer has agreed and willing to pay me 10,000 rupees. Now, when this additional 10,000 is going to come to me, I am not sending a new goods. There is no shipping bill. Now, how do I claim a refund? I have originally sold goods with payment of tax. For this 10,000 also, I have to necessarily pay tax and claim. So the government said, no problem. In your RFD1, use any other category and put a remark indicating this is refund of additional IGST paid due to price revision after export. While you are filing the refund application, you submit the other documents. Copy of the original shipping bill and original invoice. What is the contract which made a need for the price revision? Give me a debit note of this price revision. This is with payment. Show me a proof of additional IGST payment in GSTR 1 and 3B. Refund cannot be granted unless the forex have come. Show me the proof of receipt of forex. And get a certificate from the practicing chartered accountant confirming that the additional forex is due to price revision, and it is not just appreciation of rupee from 83 to 85 it has come. For the 2 rupees you are not taking a refund of the forex gain that you have made. And they have made the statement 9A and 9B of RFD 01 to accommodate this transaction. So friends, these are the changes that have happened on various circulars. Rishabji is asking, is circular 212 applicable for section 34 also? Now, Rishabh, it's a kind of a tricky question. The answer to it could be an yes and a no. Now, 15 subsection 3 is talking about price reduction by way of discount. 34 has many other instances wherein you will issue a credit note. Let's say goods have been returned. So the question of Rishabh is that all the scenarios of 34 is covered or only 15.3b is covered? The answer to it is it's only 15.3b because the subclause 2 says ITC to be reversed. Hence, this is only applicable to the discounts given after the time or after the supply has happened. Hope this answers your question. The next part of the discussion, which is key update on central tax and rate related notification. Very important update on central tax. GSTR 1A is coming up. Make notes, use your notebook, make notes. What is GSTR 1A? This is a move, an attempt made by the CBIC to make GSTR 3B as fixed. What do you mean by fixed? Is it like moving? If you look at it, GSTR 1 table 3 values are coming auto-populated from R1. Can you amend them? Yes, of course. If you make an amendment beyond 5%, it will turn to red, but still you can make an amendment to that. Input tax credit is coming to 2B. You can amend it, you can amend. So what do I do if I have to make 3B non-amendable? Now, pretty good. So it is kind of auto-populated. But what if I have made a mistake in my R1? That is like my liability is 1 crore, but I have reported as 1 lakh. Where do I disclose this additional 99 lakh liability? Or my liability is 1 lakh, just that the dot missed out while copy paste it became 1 crore. Just because R1 filed as 1 crore doesn't mean that 7512 is in operational and I have to pay 1 crore even though I haven't even made any sale of to that extent. So they have brought this concept of GSTR 1A. What is it is doing? Two purposes. Purpose number one, you can add missed out details. Okay. If you can add missed out details, you can add pertaining to current tax period only, not historical. Second, I have disclosed something in R1 instead of 1 lakh. I have disclosed as 1 crore. You can amend. You can amend the details that you have disclosed in R1 upward or downward. So between R1 to 3B, the form 1A gets opened. Is it mandatory to file? Only if there is any changes you will file. No changes, no filing. So it doesn't attract any late fees or non-filing fees. And how many times I can file? You can file only once. After you file once, you cannot edit it. What it will do? The details which is available in your R1 goes to 2B. In a while, I'll explain how it goes to 2B. But I want you to look at the scenario. On 11th, you are filing your R1. On 11th of every month, you are filing your R1. Between 11th to 20th, where let's say on some states 20 and some states 22, between 11th to 20th, where you are filing your 3B period, the R1 is open. Your R1 is R1A. So between the time period of your R1 and 3B, your DRC is your GSTR 1A is open. Now, what I can do in this period, I can increase the liability which is disclosed in my R1. I can decrease the liability. I can add a new record. Now, don't think that this is available only between 11th to 20. The answer is no. This is available between R1 to 3B date. What is the difference between? Let's say if R1 is filed on 5th, Your 1A will be available from 6th. Your 1A will be available from 6th. If 3B is filed on 25th, if 3B is filed on 25th, your 1A will be available till 24th. So it is not from the due date of R1 to due date of 3B. It is from the filing date of R1 to filing date of 3B. This is something you have to be very clear and mindful of. All right. Now, what happens? Will this gets reported? What happens? Will this be visible in my 2B? Yes, it will be visible in 2B. It will be visible in 3B also. So values that goes to in 2B and 3B is with 1A. The only thing you should know, all those that have been filed till 11th, it will be visible in current month 2B. Those which have been filed after 11th will be visible in the next month 2B. So 1A and 1 will automatically go to 3B. And for the taxpayers who are under the QRMP schemes, the liabilities which are declared in 1A and 1, including IFF for month 1 and month 2, would be automatically be made available in the quarterly 3B which they are doing. So both 1 and 1A values will go to 3B. This is one facility they brought in. I don't know, maybe a trade has to give a recommendation because the 2B credit is going to change. The change in the GST number of the recipient is not permitted in 1A because the context of 1A is what? To adjust the liability of the supplier. Hence, the change of recipient has to be done in GSTR1 only and not in 1A. So the impact I have told, if 1A filed, let's say on 15th February, it will be appearing in the March and not on February. But if 1A is filed on 10th February, that it will be appearing in the 2B of the 10th February. This is something you have to be very clear, very mindful of. Okay. The next amendment is GSTR 9. They have introduced two clauses in 4 and 5. It is 4 in G1. They have introduced 4G1. So 4G was RCM. So they have used for e-commerce operator who are required to pay tax under 9 subsection 5. So they are now expecting them to report, like Ola, Uber, report their value liability pertaining to the Ola, Uber related transactions in 9.5, their original supply related under 9 in 4G1, and their original supply related in 4B or 4A accordingly. Accordingly, if it is exempt, it goes to 5C1. This is a small change that has come. They have also given clarificatory changes in change in the headings. Important form APL 0507 withdrawal form. There is an amnesty scheme which has come in the budget, which I'll talk. For some reason, you want to withdraw the appeal after filing the appeal. A new form has been introduced in Rule 113A, APL 0507. You will be giving all the information of yours, order number, details. Especially, you will write why do you want to withdraw. The reason for withdrawal of the form has to be given. If the reason could also be the limit which is specified is below the limit, even that has to be given. So this is a new form that has been introduced. Then with regards to rate related changes, rates on cotton boxes and cases which were in HSN chapter 48 from 18% that has been brought down to 12%, both corrugated and non-corrugated paper. The rate has reduced. And for milk cans made, whether iron, steel, aluminium, anything, regardless of the material or the make, they said the milk can will be at 12%. Solar cookers, eco-friendly cooking devices, the rate of tax is made to 12%. Brooders for the poultry industries, again the rate has been set to 12%. These are the key rates that have been changed in the recent things. Rajkumar is asking, when will GST or 1A be available? Is it from August or any other? Rajkumar, I think we will have to wait for the portal to be ready. By the way, every act section which has been changed, that would also be notified. Hopefully, I think maybe from the August return, so which will be filing in September, should be available. She said Dizongji is asking any rate change in the garments. No, nothing has been specified in this. What is the monthly turnover limit for GSTR1? Kevin, monthly turnover limit, there's no limit for GSTR1. If you are under IFF, the invoice value cannot be more than 50 lakhs to report. Otherwise, people whose turnover is less than 5 crores can opt for a monthly return quarterly payment, QRMP scheme. Quarterly, they will be monthly, they are paying 3B, and in quarterly, they are be filing GSTR1. They can opt for that scheme. More than 5 crores, mandatory, you have to report it in R1 every month. Okay, so we have answered all the questions. Rishabh is asking what values will be auto-populated in R9, 1A or 1? This is another thing. Please note, 1A is not a substitute of 1. What do you mean by that? Let's say you have reported B to C as 1 lakh liability. In 1A, you cannot report 20,000 saying thinking that in 1 I have reported 1 lakh, in 1A I am reporting 20,000, it will become 1 lakh 20,000. Your 1A is kind of overriding the value which is there. So if you are reporting 20,000 in 1A, it doesn't mean that you are reporting 1 lakh 20,000 liability. It is becoming your liability, you are reducing down to your 1 lakh, from 1 lakh 20,000, you are reducing it to 20,000. So what goes to your final 9 is the amended one, that is your 1A. Good. So now let's move to the important part of our discussion, which is budget proposals. First and foremost, the extra neutral alcohol ENA may not be applicable for many. There has been a debate for many time that should ENA be taxed. Now, in many councils, this matter had come up for the discussion on the taxation of the ENA. It was there on 26th Council, 31st, 37th, and 43rd. And this matter went to the court. So, Bihar Distillery, Deccan Sugar, and the synthetic chemicals, in most of the matters, the matter went to the court. When alcohol is outside purview of GST, the extra neutral alcohol should also be outside the purview of GST. So now they have said that let us bifurcate this ENA for human consumption and for industrial consumption. They said if the ENA is for industrial consumption, GST is applicable. If the ENA is for human consumption, it would be excluded from the levy of GST. So ENA takes part same like a alcohol. So for all distilleries, this is a good relief. Next, Schedule 3. The apportionment of co-insurance. Whenever there is a large insurance premiums are taken, these insurances are allocated a portion between lead insurer and co-insurer. Now, whenever a lead insurer is apportioning the insurance premium between both of them, it is not a new supply, a fresh supply. So they brought this under Schedule 3. A very important discussion I want everyone to be aware of is insertion of 11A. Now there are many A's coming into the budget. What is it? It wants government to regularize GST short levied, not levied as a result of established trade practices. As a result of established trade practices. there was a confusion. RWAs more than 7,500, should we do this way or this way? There was a confusion. Ice cream, when it is sold in restaurant, visit 5%, or if the ice cream itself is manufactured by restaurant and sold, it should be treated at 18%. Paying guest accommodation, would it fall as a residential renting, or would it fall under, let's say, accommodation services, short-term accommodation services, and tax is levied? Now, for all these points, time to time, circular came up, gave some clarifications. In some situations, circular has given a clarification as is basis. Whatever you have done till date, that's fine. I will not question, but from now, do it this way. But even for circular to tell this, where is the power? So they have now inserted 11A, empowering government to regularize. The GSTN can now regularize whatever which is happening. So as a result of established trade practices, this has been brought in so that the taxpayers are not penalized by way of change in the view which a circular is bringing now. Very welcome. Next, 16.4. Since the time limit for issuance of invoice was not there, this was specifically brought in. 31.3F and 16.4 they have brought in. They have also ensured that section 13 has been amended accordingly, and in 13.3 they have inserted a new clause saying that if the invoice is required to be issued by the supplier, that would be applicable. In all other cases, then they are now referring to a proviso which has been introduced. So this is one consequential change. Then 54 got amended. They have said that refund of unutilized input tax credit or IGST paid on outward supply will not be allowed if the exported goods are subject to export duty. This is something. There's been issues that were going under Rule 96 Sub Rule 10 on advance authorization imports made and where the refund claims made. So now they have said when the goods are exported with duty, neither ITC nor the tax paid refund would be granted. Next amendment is on section 70. Section 70, we all know, talks about summons. Most of the summons that you have received or noticed, it was addressed to the company. Who in the company should go? Is it to director? Is it CFO? Is it who? Can their CA go? Nothing in section 70 is written. But the provisions were there in erstwhile laws for having an authorized representative to be represent on behalf of the summons. So the same has been inserted saying that authorized representative can attend the summons. Next, section 74A. Very important section. Again, look at carefully. We know section 74 is demand where the liability is not account of fraud or suppression or willful misstatement. And second, section 74 is for cases of fraud, suppression, and willful misstatement. Most of the time, notices were issued under 74 if the time limit for the 73 is exhausted or it is lapsed by the officer. So officer thinks 73 and 74 can be interchangeably used. When a notice under 74 comes, we only fight that 74 is not applicable. There is no fraud. So to put rest to the problems, a new section has come. A new section has come, which is 74A. 74A. Everyone should be aware of this section. Reason, this section is now talking that the time limit is going to be common. The time limit is going to be common for non-levy, short levy. I will give you a detailed the explanation about the 74 entries, but this has now become common. They have also said that 75 2A is inserted, wherein if they are putting a penalty as fraud and if it is not established, then the penalty will be normal penalty. Before I go to 74A detail, two more provisions I'll explain and I'll go to 74A detail. There was an ambiguity with respect to the transitional credit on services, whether the invoice received prior, service received prior, or service received prior but the invoice has been received after. So they're allowing now section 170 the transitional credit by an ISD who is transferring the credit. It could be invoices received prior and services later after would also be covered. Then sunset clause for anti-profiting has been brought in. Now any appeal for anti-profiting will go to the tribunal only. It would be going to the tribunal. Pay more attention to this slide on the analysis of 73, 74 and 74A. See, 73 scope was not involving fraud. 74 was involving fraud. Now 75 is a unified approach. It is applicable both for 73 and 74. In 73, the time limit to issue notice was 3 months before expiry of 3 years from the date of annual return. Like for the financial year 22-23, the annual return date is December 23. December 23. So 22-23 can be assessed till December 24, December 25, December 26. So 3 years from the end of the annual return. And notice for that 22-23 can be issued the 26th December 3 months before. That is 30th September the notice should have been issued. Likewise in 74, 6 years for 5 years from the annual returns and 6 months before the expiry. It was 36 months and 60 months. Now 74A has become via media. They said notice has to be issued. Notice has to be issued within 42 months. For the financial year 23-24, we will file the return in December 24. They have to issue a notice for 23-24 within 42 months from the annual returns. Now the annual return could be when December 24, they can issue the notice in January 25 or 42 months, which is 3.5 years. That is December 25, December 26, December 27 plus 6 months, which is June 28. Till June 28, they have time limit to issue the notice. Earlier order was 3 years, 5 years. Now they said is order, I will not put any limit. Whenever they issue the notice, within 1 year from the date of notice, they have to pass the order. So they have now more time to pass the order. In 73, the penalty was nil if you pay the taxes within 30 days. But 30 days was sometimes short to discuss with the consultant and everything. Now in 74A, they made it to 60 days. In 74, we had 15, 25 and 50, which was linked to 30 days. They have now changed it to 60 days. Before the SCN 15%, within 60 days of SCN 25%, within 60 days of order 50%, in all other situations, it would be 100%. This is one other very important change that has happened in the budget. Now, apart from this, there is one amnesty scheme that is coming up. Again, stay tuned. Let's look at the next important change, which is amnesty scheme. Before that, procedural changes. 109 anti-profiting is been assigned to principal bench. I said sunset clause has made in for anti-profiting. So the tribunal, who in the tribunal, principal bench in the tribunal will be hearing the matter. And the pre-deposit amount, 10% was for the first appellate authority and 20% was to the second appellate, which is tribunal. So now they have reduced this the pre-deposit to the second appellate authority from 20% to 10%. That means 10% first time, another 10% second time when I'm going to the second appeal. There is an amnesty scheme that has been brought in. What is this amnesty scheme? This amnesty scheme is talking of waiver of interest penalty. This is talking about waiver of interest penalty. For which period? For the period 1718, 1819, 1920. Provided the order or notice is issued under section 73. If the order is issued under 74, but in the appeal they said no, it has to be under 73, even that would be covered. Even that would be covered. It would also cover in case if the department appeal and the appellate authority has issued an order to pay additional tax. It was not there in the original order. Now the revision authority or additional authority has increased the thing. What does this say? This says if you are making payment of tax under this scheme, all proceedings will be deemed to be concluded. That means no interest, no penalty, nothing. However, if you have already paid some interest and penalty, refund of that is not allowed. You cannot ask for refund of it. So the amnesty scheme is not applicable for erroneous refunds. You have a condition that the appeal, if you are filing anything, has to be withdrawn on or before the notified date, and they haven't notified because the respective SGST acts have to be amended. But if you look at 53rd council meeting, they have said the 31st March 25 is the time limit they will be giving you to pay the taxes and go for an amnesty scheme. If you are opting for amnesty scheme, further appeal, you are willing to forego the rights of the appeal that you have. These are the changes that have happened in the budget. Any questions? Please put your questions in the Q&A section. I'll be taking the questions. In case if something are not resolved and you want to reach to me later, feel free to write to me at venu@vnv.ca. However, on Zoho, you have all the contact things. So you can reach out to Zoho on the support number of the Zoho. Let me just... Yeah. support.india@zohobooks.com. You can reach to Zoho, and it supports all these languages.
Thank you, sir. Thank you so much for this wonderful session. Thank you, everyone, for joining us today. Thank you.